and a very warm welcome to Policy Watch, our weekly program that seeks to keep you abreast of all the key economic developments of the week. As always, we have three stories for you. The first on the pending economic bills in Parliament, the second on the appointment of the new RBI Governor, Raghuram Rajan, and the third on the ongoing payments crisis at the NSEL, the National Stock Exchange of India. Joining me in this program is Jagannadham Thunuguntla, Equity Head, SMC Capital. Welcome to the program, Jagannadham. Successive sessions of Parliament have been marred by less and less of legislative business getting done and more of controversy. Well, the good news this time is that the monsoon session of Parliament has come as a pleasant surprise. In the very first week, the Companies Bill, which had been pending for months, has been passed by the Rajya Sabha. Since the bill had already been passed by the Lok Sabha earlier, all that remains is to get the President's assent and then it can be notified. With that, the old Companies Bill that goes back to 1956 will get replaced by a modern statutory framework. Well, will the rest of the session be as productive? This week, we'll take a look at some of the key economic bills that are pending in Parliament, as well as the implications for the economy, or if they are passed, or if they're left pending, as is usually the case. But first, let's take a look at this Bureau report.
The biggest challenge before UPA floor managers is to get some key bills passed. Key bills that urgently needs to be passed are the Food Security Bill and SEBI Amendment Bill. The government has already brought in these laws through ordinances, but they need to be cleared by Parliament before the expiry of 6 weeks from the first week of the monsoon session. Food security law is expected to bolster UPA's electoral fortunes in the upcoming general elections. Though no party is openly opposing it, several parties are reluctant to hand over the credit to the UPA government. Food security law will cover 67% of Indians, 50% in urban areas, and 75% in rural areas. Another important legislation proposing more powers to the securities markets regulator is unlikely to face any opposition. Another important legislation that awaits parliamentary nod is the Land Acquisition Bill. The bill seeks to ensure fair compensation for landowners as well as rehabilitation of land dwellers. However, it is expected to make the process of land acquisition complex and long drawn. The cost of land may also go up. Government also hopes to arrive at some sort of understanding for the passage of three other important legislations: the Insurance Bill, Pension Fund Regulatory and Development Authority Bill, and Direct Tax Code Bill. The government hopes to allow up to 49% FDI in insurance and pension sector, which requires parliamentary approval. Efforts are underway to get the principal opposition parties on board, but BJP is giving mixed signals. BJP leader Yashwant Sinha hinted at supporting a modified pension bill, but expressed his party's opposition to the insurance bill. Bureau Report, Rajya Sabha TV.
Jagannathan, as far as the Food Security Bill and the SEBI Amendment are concerned, they're largely going to go through. But I think the most significant development really is the Companies Bill, because it's been amended 25 times since 1956, and it's only now that the bill has finally been passed. There are a number of changes that have been made. The entire bill, frankly, has been rewritten. So you have class action suits, you have rotation of auditors, you have the cap in the number of members in a private company has been increased. Which of these provisions do you think is the most significant?
I think the corporate sector in India has come off a big time. I think there's a huge change in the last 50-60 years. So I think this was coming, but just that I think it was very delayed even in that manner, because it was the entire New Companies Act bill was discussed about 11 years back, and now finally it has taken the shape. I think first compliments to government, whatever it might be. I think we should appreciate the complication, and then it got delivered. And there are various points, as you rightly highlighted. I think many of them were sort of taken from the international practices and international standard. For example, class action suits, very famous in US. That is because minority shareholders on individual basis may or may not be in a position to go after. If you recall Satyam case, in case of Satyam earlier, there was a big case about the class action suits.
In the US they could do it, but not in India.
Absolutely, but the USA could, because India doesn't have that kind of facility. And moreover, even though recently there are some institutions and organizations, NGOs, NGOs which are talking about investor protection kind of cells, but they don't have any legal sanctity as such to represent the minority shareholders' interest. But now I think after this, probably those kind of bodies which are sort of acting as NGOs, probably now they will become much more meaningful and relevant and powerful in the whole scheme of things. Especially India has seen its own corporate governance issues. In that sense, class action suits is a path-breaking development. And then other measures like say having women on the boards is also a welcome move in that sense, because that gives probably a wide variety of viewpoints, and then a process of coming out into the consensus probably can improve the overall decision-making process.
Here, if I may interject, Parliament doesn't want to have reservation for women in Parliament, but they're okay as long as they're giving them reservation on women company boards.
Yeah, and then there is a widely debated CSR provision, that corporate social responsibility provision, wherein 2% of the profit should be given to the social.
But companies were not very happy with that CSR. I think some amendment was made, some change was made, isn't it?
Change was made.
Initially it was mandated, and now I think
now only disclosure is mandated now in the amended version. Now it is only disclosure is mandated. That means if any company is doing, the company has to give in its annual report and its website the details about what CSR program they are doing, because the original 2% of the CSR companies were objecting, because we have to spare a thought, already the Indian companies are under severe stress from various points of view. In that sense, it may not be a right move at this juncture.
And I think there was also this view, Jagannadham, that they said, companies said, why should corporate social responsibility be thrust on us, because many of the things that you are asking companies to do should be done by the government. So why should companies be asked to do this?
Again, if you see from the global practices point of view, CSR is never compulsory. In not even a single country there is CSR is compulsory. Many countries have come out with this provision in a optional manner, and India finally fallen into the same line. But by making the disclosure mandatory, what the government is saying that if you are, let's say, a large company like ITC, and if you are spending only, let's say, 50 lakh rupees per year on CSR, people will say, I mean, you are not doing enough.
So the idea is to shame the company.
I mean, you tell what you are doing, that's sufficient. But in the process, probably encouraging an indirect way of increasing CSR. But I think only time can tell. But I wonder whether in the next 2-3 years, really companies will be in a mood to spend even that 2%.
So there's no penalty if you don't spend, nothing.
No, it's not mandated now. It's only disclosure is mandatory. So all in all, on many counts, it's welcome and path breaking. Hopefully, if this increases the corporate governance standards, because in India many times we see that it's one thing to pass a bill and another thing to get make it implemented and executed. But I think companies have come of age in India. I think more of them are board driven, because originally Indian corporate sector is promoter family driven. But slowly, considering that first generation entrepreneurs are aging out, in the sense second generation entrepreneurs may or may not be as equipped or as talented or as motivated to run the companies. So if you see global US standards, what happens is there should be a smooth transition of a company from the first generation entrepreneur to professionally board driven. Otherwise, what happens if the second generation is not up to the mark, best of the companies crumble. So now I think that Indian corporate sector is slowly reaching to that point, that transformation. I hope this Companies Act will become a critical point in that juncture.
You also mentioned Satyam, and in that context, I think the Companies Bill also has a provision about rotation of auditors, compulsory rotation of auditors, and you cannot be auditing more than a certain number of companies. Do you think these provisions, had they been placed, something like Satyam would not have happened, or is it something like Satyam, there's auditors' hands are really tied, there's only that much they can really do?
I mean, fraud cannot be completely stopped. That's for sure. I think loopholes will always be there. But having said that, this measure definitely will raise the awareness that that should not be done. Even if they are doing, they should be a little more creative.
So I think I'll have to interrupt you there, because at this point we'll go into a very short break. But please stay with us. We'll be back very, very soon. Well, the government named Chief Economic Advisor Raghuram Rajan as the next Reserve Bank of India governor, ending the uncertainty of who will succeed Subbarao when his term gets over on the 4th of September. Though the appointment was widely expected, rumours of last-minute jockeying by some others had created a certain amount of uncertainty. Rajan's credentials are not in doubt, but will he manage to steer the economy out of the woods, out of the economic quagmire in which it finds itself? We'll ask Jagannadham more about that, but first, a bureau report.
Chief Economic Advisor Raghuram Rajan has been named as the next Governor of the Reserve Bank of India. Rajan, a former chief economist with the IMF, was appointed as the Chief Economic Advisor to the Finance Ministry in August last year. An alumnus of IIM Ahmedabad and IIT Delhi, Rajan did his doctorate from the Massachusetts Institute of Technology. He was professor at the University of Chicago's Booth School of Business before taking over as CEA. Rajan was also involved with the report on financial sector reforms, which was authorized by the Planning Commission. He will be the 23rd governor of the RBI and has been appointed for a 3-year term. Rajan is credited for predicting the 2008 global financial crisis. In 2005, Rajan had delivered a lecture severely critical of the financial sector and argued that a financial disaster might be looming. His appointment was generally welcomed by economic administrators and the industry. Rajan will make an excellent governor at the moment as he has been dealing with problems in the last 1 year, said C. Rangarajan, chairman of the Prime Minister's Economic Advisory Council and a former RBI governor. Planning Commission Deputy Chairman Montek Singh Ahluwalia said Rajan was coming at a tough time, but he has a terrific academic and professional background. As the RBI chief, Rajan will have a challenging time as he will have to battle the declining rupee, sliding growth and rising inflation amidst global economic uncertainty. The issues that will need his immediate attention are the relationship between the Finance Ministry and the Reserve Bank of India Governor's Office has hit rock bottom. Perhaps the biggest challenge for the new governor will be to strengthen the rupee, which has depreciated more than 12% in the current financial year. India's foreign exchange reserves are at a 3-year low and could cover imports for about 6.5 months, lower than what is seen as providing stability to the currency. After fighting price rises for close to 3 years, outgoing Governor D. Subbarao finally brought WPI inflation below 5%, seen as the tolerance threshold of the central bank, though consumer price inflation is still high. If liquidity tightening measures continue, interest rates are bound to raise, in which case growth could be affected. Rajan takes charge at a time when the banking regulator is in the process of giving fresh licenses for banks after more than a decade. Rajan faces the challenge of selecting the fit and proper candidate from 26 odd applicants, all of who will be lobbying hard for a priced license.
Jagannadham, those are certainly very impressive credentials, but actually if you look at it, almost all the RBI governors do come with very impressive credentials. In fact, everybody forgets that Dr. Subbarao also is from an IIT, and in fact he topped his batch of the Indian Administrative Service. So will credentials alone how far will that get him? What do you think are his key challenges? We just heard 5 or 6 key challenges, but which of these you think is the most significant and also the most difficult for him to surmount?
Well, credentials are definitely top class, but the same combination of IIT, IIM, you can find many people.
Absolutely.
So I think these days that's not in shortage. But I think one major challenge he will find is he has not run any institution till date, because in nowhere, I mean, because
IMF he was chief economist, but he was not
heading
heading
it. There's a difference
it.
between being the head and the chief economist.
Absolutely.
Chief economist, you get all the services and all the facilities, and then another thing to deliver it. I think now his administrative abilities will be tested for the first time. And secondly, that is coming at a point where the integration between the India and international point is now money is going back, in the sense probably India is trying to play that card in the sense that internationally recognized face and with Indian roots. Probably that may be one thing that has favored him in terms of getting the place. And one more thing is probably he will try for his independence as much as possible, even though in India there is always a debate between the independence of RBI Governor
he's
in
coming
comparison
from
to
the finance ministry, and he was the finance, the chief economic
one thing we should
advisor.
appreciate is that independence probably in this case is relatively easier, because he can walk away from the post whenever he wants.
That is true.
Because he has international credentials to go back to any job he wants.
True.
So in that sense, he is independent.
And he's not a career bureaucrat. So
moreover, he's not dependent. So in that sense, the independence is a natural process. So hopefully that should work in the favor. But having said all this, I don't think he can able to solve all this in 6 months. I think now we are in a impossible trinity, as rightly put by Mr. D. Subbarao. I think Mr. D. Subbarao somehow has always been reactive. I think somewhere.
I think he was also a little unlucky, because because the entire tenure has been one crisis after the other.
But if you that is where the visionary leaders emerge. I think it's one thing to say that the situation was not good, but that's why you are there. You are there in the first place, right? So Sachin may say the pitch was not good, but you are Sachin, so you are supposed to deliver on a bad pitch. So
but you don't have 1 billion, people.
True. I think it was difficult time for sure. I think of all the RBI governors, Mr. Y.V. Reddy was the luckiest because he has, as he rightly put once, and I was facing the crisis of surpluses, and whereas all other governors were facing the
luck
crisis
is also very
deficits.
important, apart from acumen, luck is very important.
Exactly, and then let's see how it goes. But one thing is sure, he is definitely taking the job at almost at the lowest point in terms of confidence levels in the corporate sector and the low.
So would you say things can only look up?
I think sometimes when you hit the bottom, I think there is only one way you can go upside. Even if the situation gets deteriorated, you can always say it was not my mistake. So
except that in this case, expectations are also very high. Everybody has kind of built him up as some kind of magician who can suddenly cure India of all its economic ills, and that's really not very possible at all. In fact, both he and the FM have said there are no quick fixes at all. So do you think he should prepare the world, prepare India at least to say, look, don't expect any miracles, we're in for tough times, and then perhaps get people ready to accept the tough times?
One major difference the Indian policymakers, international policymakers, I always feel is that international policy making revolves around accepting debt. Debt is easily they think debt is very much the way economies are run. Okay. Whereas India has always trying to keep the debt away. That's why till date one ratio is still in favor of India. That is external debt to GDP ratio.
Not really. Our short-term debt has shot up quite remarkably.
True. I mean, in generally speaking, I'm saying generally speaking, be it corporates, be it policymakers, generally we try to avoid the debt as much as possible. Whereas now, Mr. Raghuram Rajan coming, he may be in favor of the concepts like sovereign bonds more aggressively, and then take the debt. And because if you take the sovereign bonds of let's say $30 billion, that is 10% of the existing forex reserves, it can stimulate the economy temporarily. It's like drugs.
Okay, so we are still looking at temporary solutions. But on that note, we'll just take a short break. Please stay with us. Welcome back to our third and last story. Well, payment crises and stock exchanges were features of the past, or at least so we thought. After the crisis in the Calcutta Stock Exchange way back in 2001, we really haven't had another payments crisis. But before we could really get complacent about this and think that we've got our markets up to shape, we now have once again a full-blown crisis at an exchange. But this time it's not at a stock exchange. The trouble really is in a commodities exchange, the National Spot Exchange of India, NSEL. What does a spot exchange really do? And what does the crisis here mean? Will it change anything in the rest of the economy? We'll ask Jagannadham in a while, but before that, a bureau report.
The government is keeping a close watch on the National Spot Exchange Limited. It had recently barred the Jignesh Shah promoted exchange from issuing fresh contracts following complaints of irregularities. Now more powers have been given to the Forward Market Commission to ensure smooth settlement of contracts traded on NSEL. The move is aimed at preventing payment defaults after the exchange was barred from issuing any new contracts to market participants.
We are closely watching. Right. The FMC is empowered, and if they need more powers will be given to them. Right. So we are under discussion. Yesterday also there was discussion. FMC chairman is in Bombay, right. So he is watching. There's nothing to worry about it. It is under control.
The government had received complaints that the products issued by NSEL for trading on its platform violated market regulations. The NSEL, an electronic mandi or exchange, was issuing spot contracts in various commodities including gold, which were not regulated by FMC. The government had asked the FMC to ensure that dues of nearly 7,000 small investors are settled on a priority basis.
Jagannadham, does it seem, at least as far as the middle class is concerned, they always look at stock exchanges and the broker community with really low suspicion. Now do you think something like this, when it happens, the suspicions get reinforced? Because after all, NSEL, they were issuing what were essentially forward contracts when it was a spot exchange, and they were also doing short selling. Now what exactly is a spot exchange? Can you just explain to our viewers, and why was this an irregularity?
Yeah. One general perception in Indian mentality psyche is that banks and the exchanges all are government. So this is a synonym to government. That's a general philosophy. But we have to remember that all these are private institutions and run by like any other corporate. So just that probably they come under some regulator. Whereas in this case, even it was not coming under any specific regulator. Also, to that extent, maybe some regulatory arbitrage was open. So what was happening is that at the same time, for the same commodity, they were the price of the spot market. Let's say onions, if trading in the spot market will be different. In future market is different. Generally speaking, the futures will be trading at a premium. If let's say 100 rupees is onions, 105 will be the futures market. So you buy at 100 and you short in the futures at 105 because net you have hedged your positions. That means you are taking the taking the 5 rupee advantage. So whatever the money that was going in, the basic idea is that this is being honored. That was the whole premises, and that's why. But having said that, in financial markets, always we remember that whenever something appears to be guaranteed, I think it doesn't come. It doesn't happen that way because everything is subjected to price risk and everything is subjected to the counterparty risk because the entire exchange model, be it in India, globally, it happens on one thing that the counterparty risk is not there. That means if I am going and selling 100 crore rupees worth of Reliance shares, I know that by end of the day, that is T plus 2, the money will be coming to my account. I need not even think for a second, I am selling whether that comes or not, because that's why we have created this exchange model. Now the very premises are the foundation on which the exchange business happens, that is third party risk being absorbed by the exchange model. That is where the whole thing went wrong. I think generally the middle class and lower middle class thinking that it's nothing but government, because I think that is one more area where all this problem happens. But I confidently feel that...
Is it the problem with the kind of people who are allowed to float exchanges, or is it regulation? Where does it, because we keep talking about fit and proper.
Frankly speaking, the financial technologies and NSELs, they have very deep understanding about the business, and they were in the business long enough, and then they have the exchange experience abroad also. Probably putting that entirely blame that promoters were not aware, or they were not with doubtful integrity, somehow that may be too long to expect to stretch that argument. But having said that, definitely this raises the eyebrows, because definitely credibility and confidence levels get
So I'll have to interrupt you there, Jagannadham, because we had come to the end of our program. Thank you so much for being with us. But before we close, we'll take a quick look at the key takeaways. Well, as far as the first topic story was concerned, as far as the economic bills are concerned, pending in Parliament, the good news really is that the companies bill, which has been pending for long, we've had 25 amendments, that's been passed, and a number of good provisions have been incorporated. As far as Raghuram Rajan is concerned, I think Jagannadham is of the view that he has a very tough challenge, but he will have certain advantages because he'll be more open about many things, and that may work out to his advantages. As far as the NSEL is concerned, Jagannadham felt that, exchanges are all blamed very often for things that are not entirely, in their hands, but yes, credibility of exchanges does get hurt in the process. With that, we come to the end of the show. Thank you very much for being with us, but we'll be back next week, same time. Till then, it's goodbye from all of us at RSTV.